Hello, I'm James and it's great to have your company live from Kalkine Studios in Sydney. You're watching the early trades. Let's get started with our market open report. Australian shares are trading slightly lower at the moment, with Goldminers offsetting losses from the health and tech sectors. The S&P ASX 200 index is down by 0.1%. Northern Star Resources was up by 6.8%, Evolution Mining trading higher at 6.5%, Silver Lake Resources also advanced 6.5%. Gold Road Resources was also up by 6.3%, while Regis Resources firmed 6.3%, and Ramelius Resources also climbed 6.2%. Additionally, Novonix was down 5.5%, Liontown was also down by 4.9%, and Imugene was down by 4.8%, along with Appen, who traded 3.9% lower. Let's now take a look at some of the newsmakers from today. In terms of our headlines, Crown Resorts has accepted an $8.9 billion takeover offer from US investment firm Blackstone. Under the terms of the offer, Crown shareholders will receive $13.10 per share at a 32% premium to Crown's closing price on November 18, 2021, when the offer was first made. The Crown board has unanimously recommended shareholders vote in favour of the transaction. Trading in Crown Resorts shares has been paused pending a further announcement from the company. Sources close to Crown said the board signed a deal on Monday morning after weeks of negotiations about the sale agreement and nearly 1 year after Blackstone made its first non-binding and indicative offer. Soaring property valuations have supported a strong increase in revenue and profit during the 2021 financial year as well for GPT Group. The company's revenue rose 720.6% and net profit climbed by 767.4%. The profit result was supported by an increase in property valuations. Funds from operations was $554.5 million, flat on a year ago. GPT Group declared a final distribution of 9.9 cents per share, and most investors with a basic grasp of Netflix and its business model will also agree that the streaming giant is now behind the Crown, and Stranger Things spends a lot of money on content. But what is arguably lost on the casual observer is that its investment in addictive viewing, about US $8 billion, is entirely self-funded, according to Loftus Peak Chief Investment Officer Alex Pollack. In fact, Netflix bought back $600 million of stock over the second and third quarters. It will be free cash flow positive from this year onwards. And for a $138 billion market cap company, it has a rather minuscule amount of debt at around $6 billion US. When Netflix shares fell 21.8% on January 21 following disappointing subscriber growth, it became the face of a torrid quarter for tech megacaps. It was soon unseated by Facebook's parent Meta Platforms, which fell 26.4% on Feb 3. Beach Energy also grew net profits after tax by 66% to $212.9 million for the 6 months to the end of December, from the same period in the prior year, following a surge in the price of oil. Revenue grew 10%, helped by higher realised prices and higher third-party sales, partly offset by lower production volumes and higher FX rates, according to the company. The average price of oil jumped US $47 per barrel to $84 US across the two periods, adding to a $198 million tailwind to revenue compared to the half-year 2021 results. Praemium is also on track for full-year earnings guidance of $16.5 million to $18.5 million on an underlying basis after reporting EBITDA for the half of the year of $7.5 million. First half revenue was up 25% and it reported a net loss of $2.6 million compared to a net profit of $2.8 million in the previous corresponding period. Funds under administration were up by 43% and no dividend was declared. Well, that's all for now on the early trades. Stay tuned to Kalkine TV as we have many more shows lined up for you, including the latest for the market, economies and diverse themes and sectors. I'm James, signing off for now.